Welcome traders to my second video introducing the methodologies that is used when making decisions for both the TurtleWins and TurtleKing Signal Provider account. This session I'd like to discuss about the subject of the DXY, or the US dollar. And as you can see here, I've got 8 blank charts. Up on top here, you can see the euro against the US dollar, the pound against the US dollar, the Australian against the US dollar, and the New Zealand against the US dollar. On the bottom, we have the opposites: the US dollar versus the Swiss, the US dollar against the Swedish krona, the US dollar versus the Canadian, and the US dollar versus the yen. So basically, this is a set of currencies that would assist me to getting a better idea of what the US dollar itself is doing. I believe that is key in trying to evaluate or define for yourself every trading day. If you can define for yourself the current direction of the US dollar, it makes it so much more easier to find opportunities and trade them successfully in the market. There is, of course, the US dollar indice, which comes under the name of the DXY. Now, the DXY, as I said, is just an indice. It's and it's made up of 6 currencies, or a basket of 6 currencies to try to describe the US dollar movement. The prominent currency in this basket of 6 is the euro, and the euro makes up 58% of the DXY. The yen as well. The yen makes up 12%. The pound makes up 12%. The Canadian dollar makes up 9%. The Swedish krona 4%, and the Swiss francs 4%. So as you see, the euro itself is a prominent indicator of the US dollar. And it's my belief that my observation, the Swiss and the euro typically trade arm in arm. They're most often, 80% of the time, if you could say, trade in the same, well, in this case, obviously, the opposite direction, but they trade the same way. But when you get them all together, when you get the Swiss, the euro, the pound, the Australian, and the New Zealand, and especially the Canadian, when you can get an idea of market movement with these, say, 6 currencies, it gives you a lot better footing to understand which way the US dollar truly is going. And you really need to be looking at minimum 4-hour charts to get a gauge. The yen, of course, is a primary one as well. But when trying to define the US dollar, I don't believe the yen is a good indicator, because the yen has a mind of its own. It's a very large, the Japanese economy, of course, is a very large economy, and drives the currency around independent almost. So I'm just going to switch over to what you've seen in the past, but this is a little bit different. These are my moving averages. It's basically the 55 EMA exponential moving average, but it's color coded. So instead of just being a blank line, it's just simply saying, well, green is up and red is down, i.e. the price is below, hence it's red, or the price is above, so it's green. And so when you see it like this, in this case we see, oh wow, look, so this is green, so the euro is bullish, the Swiss is bearish. So in this particular trading period, in this last few days of last week, excuse me, in this last few days of last week, there was the US dollar was demonstrating a weakness. As shown here, it's weak, and the euro is strong. Let's get a few of these other currencies going. The pound is also demonstrating a strength. So they're definitely the prominent currencies. I've got another one here, the Swedish krona, and I just have it here just for demonstration. I don't trade it, but it helps paint the picture for me. But the primary ones. But then here we've got the commodity-based currencies, the Australian and the New Zealand, and the Canadian. They're actually pointing a little bit different. So whilst you've got the US dollar demonstrating a weakness, in reality, if we want to describe it this way, the relationship of the price in relation to its own EMA will demonstrate the currency's individual currency's strength. It's probably getting a little bit confusing now, but obviously this price of the euro, and they should be trading all in the same direction, but they're not. This price of the euro is above its 55 EMA. The pound is also above its 55 EMA, but of course the Australian dollar has been very weak. It has plummeted all of last week. So it is actually demonstrating still a great deal of weakness. So in reality, if the US dollar is weak and the euro is climbing, you shouldn't be choosing the weakest of currencies to trade, to go long. You should really be trading the strongest of currencies to go long. So hence the pound or the euro. If, however, for example, this trend line here were to have failed, were to have failed and this price comes down, then perhaps one of the better currencies to trade would be the Australian, because it's the most weakest out of these four. Well, let's say these two are the weakest out of the four. I hope that makes sense. So basically, what I'm trying to amplify here is trying to define the US dollar's direction. So let's come up with, of course, we've got this trend here, which is a major example. What's that? 27th of October, 31st of October. Let me just bring all of them to that position. A bit further. Oh, that's still stuck here. 31st of October. Let's just bring it to around the 8th of November. Wish there was a faster way of doing this for you. 28th of November. No, that's probably the best way. Here we go. Oh, you're stuck on. Oh, that works quite well. All right. So here, this is a perfect visual example, isn't it? All of the US, all of the currencies on top are clearly bearish, and the currencies on the bottom are clearly bullish, of course, except of our yen. So we're just going to ignore the yen in this video, in this particular example. So hence, as a result, there's overwhelming evidence that the US dollar is flat out strong. So therefore, what it tells you is that you just trade every single break that you see, every single break, be it on the 4 hour, 1 hour, or whatever way that you trigger. You trade every breakdown, or in this case, every trade up. So that just to give you a bit of an idea. So the primary ones so I know you've got the DXY as an indicator in itself, and some people track the DXY and get their information from that. But in the example, say over here, back into its current time frame, the DXY, I have got the DXY on another charting software. The DXY was actually around this time was still saying the DXY is bullish. And especially here, the DXY was bullish. But it's been highly influenced by these commodity currencies to affect the direction of the DXY. So the DXY in itself is not always the best way to gauge the US dollar direction. It really is best to observe as a set, especially for me. I like to use the euro and the Swiss as the primary guide for the US dollar. Anyway, another point then is the yen. Well, of course, the yen, what we're talking about with the DXY, with the US dollar, all of these, of course, are US dollar crosses. But when it comes to trading the yen crosses, well, in this case, the yen is the base currency. It's flat out, in this case, rising. Well, let's go and have a look at what the yen cross is, the yen cross charts. So this is, again, instead of the US dollar, these are all the yen crosses. So this is the euro yen, the pound yen, the Australian yen, the New Zealand yen, the yen itself, the Canadian yen. Gosh, sorry, I've just had this one up, for example. I don't know what that is. The Swiss yen. I think that's well, you guys can work that out. so these are all the yen crosses. So of course the ideal, the ideal of course is say when trading them is to get an idea firstly if the yen is going up, what is the euro doing? So you really need to marry the two up. But I'm just going to concentrate just purely on the yen crosses itself in this example. Again, you know, if we went back to when everything was climbing, when the yen was clearly climbing, again, it's you know that the yen is climbing. If, for example, you know that the euro was climbing in the same period, you'd be definitely trading the euro yen. So when they're both climbing up, then the euro yen is very clear. But in this case, the yen is like the US dollar. It is the most dominant in this set of currencies, of course, the yen crosses. So if it's flat out climbing, then it's going to be dragging all of the currencies up. All of them are going to climb. So anyway, I hope that makes sense. I suppose I'll just bring this one up. Just sorry, just duplicate this thing. Just touch on one last thing when it comes to these crosses. In this same period as the euro yen was climbing, or let's say the yen itself was climbing, fortunately, the euro was climbing as well. So if the euro is climbing and the yen is climbing, then of course the euro yen will be climbing. So that's just a secondary note. Anyway, that's all I really wanted to cover this day. I hope that's beneficial. I wish you guys all the best in your trading and look forward to seeing you in the next video.